Okay, so looking at this oil chart here, oil's been, in a very strong uptrend for a very long period of time, very stable relationship to the 20 EMA. It starts to break below this, and I want to zoom into something very interesting here. So we have a sell-off here, and the sell-off is kind of orderly. And what do I mean by orderly? It kind of has a general rhythm to it, and it has a general kind of, as a pseudo channel-like structure to it. It's not totally perfect, but it's kind of there. So it's relatively orderly, and there's some elements to this, which is that, it has a strong red candle, then a few, corrective candles, and then some strong red selling, and then a few corrective and strong red selling. And so, that tells us that the sellers, it wasn't just a one-way market for the sellers. It was the sellers, were fighting some of the longer-term buyers that were involved in the large uptrend. Many of you have been watching oil. If you have been, you notice oil has just been on a tear, constantly gaining, And so with that being said, they're probably fighting some of the long-term buyers in here, which is why you're getting some pushback. But the sellers still maintain control. Now, this is where it gets interesting. Take a look at this here. I want to delete this line. Take a look at this here. So price hits the floor, bounces a little bit, goes to 20 MA. Very strong selling, makes a new low. But then all of a sudden, and we have a 50 pip rejection on the bottom of this candle, which by itself, considering the size of this candle, would not necessarily mean anything. But the fact that it was followed up with another candle that opened at 105.59, it only went down 9 pips and then launched up and took out the open of this candle, tells you something. It begs the question, wait a minute. First off, there were strong sellers involved in this candle. Where did they all go? Second of all, there were sellers from 110 down to 105. Where did they all of a sudden evaporate out of the market? When you see these kinds of strong, trend environments or stable trend environments, and then all of a sudden you get, kind of a very strong reversal candle like this. It's not an engulfing, and it's not an outside bar because it doesn't eclipse the lows here or the highs here, but it's a very, very strong reversal candle. And so with that being said, when you have these back-to-back like this, especially on a higher time frame like a 4-hour or daily, it should beg the question, wait a minute, where did all the sellers go? They were present for, $5 sell-off on it, and they were present when this thing was selling on the break, and so where did they all go? And so the fact that this had a rejection by itself, not that big a deal. The fact that it had a rejection followed by very strong buying that took out all the losses on this candle communicates, wait a minute, they ran into a line in the sand, and that line in the sand was the bulls saying very clearly, you're not getting past this. You've tried, you've been dropping $5, we're going to punch back, and we're going to punch back harder than you are. And so what happens after that? The price sits on another line, let me draw the line right here, for about another 5 candles. Now, I would like to point out a couple pieces of symmetry here. Here's the low, and then we have 1, 2, 3, 4, and then the big candle here. And then again, we have 1, 2, 3, 4, and then look what happens after this. And I want you to watch this pattern. Boom. Price launches up right after this and takes off. So you should see the pattern here. You could call it, a head and shoulders. It really wouldn't be a head and shoulders because to have the traditional head pattern, you would need a much, longer head. If we zoomed in on a smaller time frame, we might have a head and shoulders pattern. I really don't care about head and shoulders patterns. What I do care about is that after 4 hours of strong selling, along with $5 in a sell-off, it ran into one candle that completely eclipsed all the losses of the prior candle. And then right after that, the sellers never came back. The sellers just evaporated in the face of that, telling us they're not interested in getting in front of this candle here. And what happens? The market takes off right after that. Now, fast forward a little bit. Do y'all see the same pattern? Can you guys see where it's at? Yes, no? Does anybody see it? It's almost the exact same pattern. Let me zoom into it for you. Here it is again. Strong selling from 107.5 down to 104. We have kind of a flag pattern, and then we have a very strong selling candle. Incredible candle. It's a $2 sell-off in 4 hours. Over $2. What happened? Decent rejection, but then the next candle is exactly the same. It opens, has very small selling to the downside, is immediately bought up, takes up almost all of the losses on this right here. Could be exhaustion. It's definitely a possibility. Or the bottom line is the sellers just ran into some buyers who said, we think long-term oil is going to continue to gain and we'll be happy to buy here. Whatever it was, it doesn't matter. It's the same pattern again. And then again, look at it. You have, here's the bottom on this candle right here. And then we have 1, 2, 3, 4, plus the big selling candle, big buying candle. 1, 2, 3, 4. So to me, this was a no-brainer trade setup. It was an absolute no-brainer trade setup. Buy on open, stop just below the low of this, target recent highs. Let me show you where, right here. Go just a little bit below it. And there you go. The exact same pattern. So can everybody see from a price action perspective why I took this trade, how I was able to spot the pattern, how I was able to relate it to the prior history, and then say, okay, there's a trading opportunity here. Same play. Back over here, you have your sell-off 1, 2, 3, 4, big selling candle, big buying candle, 1, 2, 3, 4. Buy on open. Stop just below the lows of this little bottom right over here. Target prior tops. You have a fantastic R to R on these trades. I mean, here is $1 stop, and you have a $2.77 target. It's a 2.7 to 1. On this one, I was afforded a much better play because the lows on this one were much closer to the low of the prior one here. Entry, stop, not even a 50-cent stop, and a target of 107.60. Over $2.10 target, 4 to 1. So